What is up, you guys? Today we're going to talk about ETFs and specifically ARKQ, which is the main, ETF by ARK Invest. If you guys don't know ARK Invest, if you've ever heard of Cathy Wood, they're one of the bigger investors in Tesla. They also have a price point for Tesla of $22,000. A long time ago, they were called crazy. Same with like Ron Barron, I think, who had like a $7,000 price target on Tesla. But a lot of people are asking me about ETF investing and more specifically, ARK Invest in this ARK ETF. So if those of you who don't know what an ETF actually is, it just means exchange traded fund. The best way that I can kind of explain it is like it's a folder, and each stock is like a piece of paper inside of that folder. So let's say you don't want to own, just Tesla or just TWOU or any of these companies. What you could do is actually buy the ETF and have exposure to all of those different companies. So if you guys, obviously you've probably heard of the S&P 500 or the Spider Index, which is SPY. That is the actual ETF for the S&P 500. So what a lot of people do, especially if they're long-term investors and they're not really active investors, but they want to just kind of track the S&P 500, or maybe they don't want to be overexposed to just technology or just industrial or just consumer, defense or something. Maybe what they would do is actually go ahead and buy an ETF so that they can still track the market, but not have too much exposure to just one area. What you'll see a lot of times is, a lot of people will just buy a ton of technology companies, or they'll buy a ton of defense companies. You're not diversified. If you're a long-term investor, you want to be diversified. Now, of course, not every ETF is made equally. The S&P 500 index is going to look a lot different than ARK Invest ETF. One thing you'll notice about this ETF, and this is why I kind of wanted to go over this, at least the top 10 holdings, is a lot of these are pretty, I would say meme stocks. They were at one point. Obviously, they're not anymore. But a lot of them are what would be considered aggressive investments. And so I want to go over this the portfolio within ARK Invest. I want to actually see, let's real quick, ARK Invest. Let's just do ARKQ holdings, because right now I have the top 10 up, but I kind of want to see what the top 20 or 30 is. I know they have, let's see, fund holdings in a PDF format. Here we go. So these are quickly kind of everything. If you want, I can link this down below. I'm only going to go over the top 10 because in my opinion, they're really the ones that are the most important because they have the most exposure. So you can see here on something like this, it'll say weight. That means in this case, Tesla is 10% of their portfolio. They have $63 billion worth of Tesla. Some of the bigger ones you'll see, and we'll go over the top 10, is like JD.com, John Deere, TWOU, which if you guys don't know, that was a huge meme stock a couple of years ago. Workhorse, which is another big one that most recently has been just going, nowhere but up. Baidu, Amazon, Intuitive Surgical, Apple. We'll come back to this, but I just want to look at the top 10 first because they hold the most weight. What you'll kind of notice in a lot of ETFs is, they might have exposure to a lot of different companies, just kind of like balance out the ETF, but it's really the top 10 holdings most of the time that will move the ETF itself. Like if you look at the S&P 500, just mostly FANG alone moves that ETF, even though they have, tons of other companies. So overall, you can see this is on TD Ameritrade. This is what I use. I love TD Ameritrade. I love this kind of long-term, tools that they have for longer-term investors as well as trading. Obviously, Thinkorswim is like my favorite platform for trading. But this is kind of like live. I didn't want to go into this and like already kind of know what they're holding. I wanted to kind of do this live, give you my ideas of these companies and kind of quick little breakdowns. And what do I think about this real time? I don't want to come into this with any biases or, I've never looked at it. I really never have. I just know they have big positions in Tesla, TU, and Workhorse is another big one. So I kind of want to go over this with you guys and we'll see how this looks. So let's take a look at, first of all, the valuation of this ETF. Every ETF is going to have a different valuation and a different PE ratio. So normally it's pretty good to say that if the S&P 500 is below a 25 PE ratio, things are usually undervalued. If it's an over 25 PE ratio, usually the market's, if it's below 25, it's undervalued. If it's over 25, it's overvalued, which means you're not really getting a deal. Here you can see the valuation of ARKQ is 35.3. This is because, and we'll talk about this in a bit, most of the companies they own are up ridiculously huge, right? Year to date returns on Tesla, 400%, TWOU, 52%, Xilinx, 118%, Proto Labs, 54%, JD, 114%. Like, they are up a lot. They're up pretty huge right now. And I will say this is a very, very, very aggressive portfolio in my opinion. We'll quickly just go over and look at its, the performance in the past year. This thing was trading around like $27 in March, and now it's up to $60. A lot of that has to do with Tesla and TWOU, which we'll talk about. So first, let's go through and let's take a look at Tesla. Obviously, Tesla, I've made a lot of videos on Tesla. I'm a firm believer in Tesla. I love Tesla. Is it a good time to be buying Tesla right now? Unless you're holding for more than 5 years, I don't think it's a good time to be buying Tesla. But overall, love the company. Market cap of $418 billion, guys. That is ridiculous. I never thought that I would see that so soon. Earnings per share of only 40 cents and a PE ratio of 1,079. That is stupid. I didn't even know it was that high. I knew it was high. I didn't know it was that high. That's ridiculous. I'm not going to touch too much on Tesla because you guys know where I stand. If you're a long-term investor and you don't mind buying high, buy it up, right? Obviously, ARK has gotten its name from being one of the bigger investors in Tesla and being very, very, very bullish on Tesla. They were calling Tesla at a 2,200 like 2 years ago when it was trading at $180. So good for them. Do I think it's a good time to buy Tesla short term? No. If you're going to hold it 5 years or more, not a bad time. So let's move on to the next one. TWOU. This is kind of an information technology software company, so we can look over the company profile for those of you who do not know what it is. TWOU is a provider of integrated solutions consisting of cloud-based software as a service combined with technology-enabled services that allow colleges and universities to deliver online degree programs. So kind of think of it like its own Chegg, like its own Sylvan Learning, like those type of companies. It's essentially an online platform for colleges. And obviously, it was doing pretty good. We've seen a decent bounce since July. This is a 3-year chart here because of the whole Rona situation. But before that, this thing was a meme. This was a serious meme. We were trading up at $100 and it just died. It went down to 60. Then it went down, I believe, to $10 at one point. Let me actually check my phone because I'll be able to see what the lows were. The chart here is not really the best, but I know it went down low, guys. Like it was down pretty low to $13 at one point. I remember like a lot of big YouTubers like Ollie's World of Stocks, he was buying it. I think Jeremy was buying it at one point, but they all ended up selling out early, I believe. But overall, $2.3 billion market cap, PE ratio is nothing because they're losing money. They have an EPS of negative $5. I have looked into this company a bit. I know one of the big reasons it kept falling was lack of leadership. The executive team was really, really bad. And a lot of people I considered as reputable investors actually jumped ship on this. So why ARK saw a big potential to have this as their second biggest holding, I don't really know. Like right off the bat, this is just kind of a quick breakdown. I don't know too much about TWOU. Fundamentally, it's not something I would invest in long term. I don't like investing long term in a company that is not profitable, really, except for Uber, but I'm not invested in them anymore. I don't like a company that's not profitable. I don't like a company that I believe is pretty overvalued right now. That's had a pretty crazy past, how many months? Even just in the past 3 months. Let's actually just do a year. It's a bit better. But the past year, it was trading at $13 and it went up to $50. A little on the overvalued side for me, but that is their second biggest holding. Xilinx, I believe that's how you pronounce this. It's a semiconductor company. It's engaged in designing and developing programmable devices and associated technologies. The company's programmable devices and associated technologies include integrated circuits in the form of programmable logic devices, including systems on chips, three-dimensional ICs, software design tools to program PLDs, targeted reference designs, printed circuit boards, intellectual property, which consists of Xilinx and various third-party verification IP cores. This company designs services, customer training, field engineering, and technical support. Semiconductors, I think, are going to have an amazing next 5 years. I've never really looked into this company. When I think of semiconductors, my first go-to is usually Skyworks Solutions because they have a phenomenal balance sheet. I feel like they're even now fairly valued, maybe a little bit on the overvalued side. I love AMD. That's really about it. I haven't really looked into this company that much, but we're going to look into actual fundamentals of this company from a financial side because I'm actually really intrigued. Market cap $25.3 billion. EPS is $2.55, which means a PE ratio of 40. PE ratio of 40 is a little high, but you also have to think to yourself, what is it relative to other companies? So if you like within the industry, so usually a 25 or lower, like I was saying, average PE ratio is considered undervalued, but you have to look at the actual sector because semiconductors usually run pretty high PEs. So the PE ratio on Skyworks right now is about 30. The PE ratio on AMD is going to be ridiculous, 154. The PE ratio on NVIDIA is 94. So for me, the PE ratio of XLNX, is that what it was? Yeah. So the PE ratio of 40 is not that crazy. So I don't think that's bad. They do have a dividend. I actually really like that. That's why I like Skyworks Solution. It's only 1.5%. I think both of them are about the same. But overall, it's still a dividend, which is always great if you're going to have an ETF because you're still going to get paid out on the dividend, or if you're just buying it yourself. Let's take a look. It is near the top of its 52-week high, but most of tech is right now. Let's take a look at the income statement. So total revenue, what you want to see is growing revenue. We are seeing that, by about $1 billion per year. $100 million per year. Not bad, right? Small, but still consistent growth. Let's look at net income. This is very important. It doesn't matter if you're making more money on the revenue side if you're not keeping more money. So we do see decent revenue growth or decent net income growth from 2016 to 17, 18 to 19, and then, fell a little bit in 2020. But with a lot of these companies that are a little more cyclical, you're going to have that. They're going to be putting a lot more money into research and development. They're going to be trying to put more money, obviously with 5G coming. They're going to be putting a lot more money into just growing the business, but it's not like there's a huge decrease. So that's not bad. Total assets, $4.6 billion, and total liabilities, $2.3 billion. From what I know about this company, I really like this company. Balance sheet's not, the income statement and balance sheet is not as strong as Skyworks Solutions. I would still probably go with Skyworks Solutions, but I really like this. I don't know too much about the actual company and the business plan, but from the brief amount that we've looked over and the fundamentals, I really like this company. I can see why it's their third largest holding. All right, Proto Labs. Proto Labs is an e-commerce driven digital manufacturer of on-demand three-dimensional printed computer numerical controlled machine and injection modeled custom parts for prototyping and short-run productions. The company's geographic segments include the US, Europe, and Japan. The company targets its products to the product developers and engineers who use 3D computing aided designing software to design products across a range of end markets. This product line includes injection molding, CNC machining, and 3D printing. Okay, so Proto Labs is a 3D printing company, essentially. I don't know what the hell they go into. Most of the time I'm reading this, I'm like, I don't even know what SLS or 3D CAD, like I don't know anything about this. So if you guys know more about any of these companies specifically, put it down below. I'd like you guys to let me know and educate me. a bit on this because I'm just kind of really quickly looking over this and valuation, so I really don't know. Market cap 4.2 billion, EPS $2.18, PE ratio is 71. It's pretty high, relative to other companies in this 3D machinery sector. I don't know if that's high or not. Trading at its 52-week high. Essentially, if we look at the balance sheet, we're going to have $674 million in assets, $88 million in liabilities. That is pretty good. Nice growing steady revenue. It's very good. And net income, not a big spike down. So overall, fundamentally, not bad. Is this company trading at a pretty high valuation? From what I know, from what I can see, from the 52-week high, from the PE ratio, yeah, it is. But I think that most of the stocks that you're going to be getting inside of this ETF are trading at their 52-week highs. Alphabet, I mean, we've talked about this company a lot. $1.1 trillion company. I love this company long term. I think Alphabet, it would be a great play over the next 5 years. Is there a lot of other companies in this FANG that I would rather have? Yes, I'd rather have Amazon. I personally would rather have Apple. Not Netflix. I hate Netflix. I'd rather have Microsoft. So they do have Alphabet. They do have Amazon in these in the ETF. It's just not as high as far as exposure. So obviously Google, it's always a good play. Kratos Defense and Security Solutions. It's a technology company, intellectual property, and product solution company focused on the United States and its allies' national security. The Kratos Government Solutions segment includes the operations of Defense Rocket Support Services, Microwave Electronics Division, Technical and Training Solutions, and Modular Systems, which provide technology-based defense solutions involving products and services, with the focus relating to the nation's command, control, communications, and computing, combat systems, and intelligence renaissance requirements. The unmanned system segments includes its unmanned aerial, ground, seaborne. So from what I understand, this is like a drone company because it says unmanned. So I believe it's like a drone self-defense aerospace company. It's pretty cool. Don't know anything about it. If you guys do know about this, let me know. I'd like for you guys to school me a little bit on this. What I'll probably do is actually, since overall it seems like there's a lot of cool stuff in this, I might actually do a deep dive on every one of these companies to where I actually know what the hell every aspect of these companies rather than just fundamentals. But my goal with this video is just for you guys to quickly watch this 20-30 minute video and decide if this is something you'd want to invest in or look further into. That's what I should say. Market cap 2.6 billion, so pretty small company. PE ratio of 385. So it's trading down around like $7, I think, and went all the way up to 25 and pulled back. Still sitting around its 52-week high. It's had a pretty good year if you would have gotten in around March, but really kind of flat year over year. Let's take a look at fundamentals, at the income statement. So growing revenue year over year. That's what we want to look for. Let's see. Total net income. They actually posted a profit this year for the first time since 2015. So not too bad. I'd like to see a more profitable company, but it's whatever. So we have $1.18 billion in assets and $602 million in liabilities. Very quickly, what I'm just looking for is at least double, if not triple, the assets to liabilities. I talk a lot about that in my courses, and I do have some videos on this, and I'm looking for growing revenue and growing net revenue. That's a pretty staple that I want as a long-term investment, because if you have a lot of money sitting in the sidelines on your balance sheet, not only will it help if the economy dies, kind of like what we saw back in March, but also it'll help you to acquire new technology, acquire smaller companies. It's just very important as a company to have that. Let's see, Deere and Company. So this is John Deere, right? Engage equipment operations. Yeah, so, okay, I was just making sure. The company is engaged in providing financial services. The company operates through 3 business segments: agricultural and turf, construction and forestry, and financial services. I didn't know they did financial services. It's pretty cool. Market cap, $68.4 billion. EPS of $8.45. A PE ratio of 25.85. It's not bad. Not a bad PE ratio at all. It is at the very, very top of its 52-week high. Annual dividend, 1.39%. Let's take a look at fundamentals. Let's look at the balance sheet. What is this displayed in millions? So if you guys don't understand like how you see 5,000, this says the value is displayed in millions. Sometimes it'll say thousands. So this means 5.975 billion. That's what we're looking at here. So total assets, 73 billion. Total liability, 61 billion. I don't really like that. I want to see at least 2 to 1. So I'd want to see about 120 billion in assets. But John Deere is a very strong company, been around a very long time. Revenue growth, it's good, growing year over year, very slowly though. And net income growing year over year, pretty slowly though. So not bad though. Overall, not a bad company to have in an ETF. And that's the top 10 holdings, guys. The biggest thing that I can tell you, oh, and then we have JD. I forgot about that, and Trimble. But the biggest thing that I could kind of say to you guys is, if you're buying this ETF, you are buying at the top, right? Like, obviously, you're buying at the top. Now, if you're planning to like hold this ETF for 5 years, it doesn't really matter. If you're somebody who's going to buy an ETF, you're basically going to be doing just a dollar cost average. So if you guys don't know what dollar cost average is, how much is our ARKQ worth right now? Let's see, ARKQ. So it's worth about $59. So what you would do is every single week or every single month, whatever you want, it'd be better if you did it every week, but buy 2. So you just buy 2 shares every single week for the next 5 to 10 years, preferably 30 years, because the longer you dollar cost average, the better it's going to be. So that's kind of what you would want to do. You're not trying to make quick money on this ETF. I wouldn't be surprised if this ETF pulled back pretty hard in the next couple months to a year, considering everything is at all-time highs. But the more that it pulls back, it's just a better opportunity for you. So this is also everything within it. We do see some bigger companies like Alphabet. We talked about Google. We do see Caterpillar, which is a bigger company. We talked about Workhorse a little bit. I'm probably going to make a whole video on Workhorse because I have a lot of people ask me about it. We do see Baidu, which Baidu is basically like, I want to say Baidu is like the Google of China, I believe. You can see, what are some other big ones? Virgin Galactic Holdings, SPCE. It's another company I really like. NVIDIA, Apple, Tencent. Tencent's huge, gigantic Chinese company. Autodesk, Morgan Stanley. So there's a lot of big companies in here. Overall, I don't think it's a bad ETF to invest in. It is for sure very, very, very aggressive. But if you're younger like me, if you're probably 30 and below, it's not a bad ETF. If you're somebody who's like 60, 65, you're getting ready to retire pretty soon, I wouldn't have a lot of money in this because, someone like me, we have time on our side. So overall, let me know what you guys think. Is this something you would invest in? Is this something you're going to pass on? Is this something you want me to look deeper into? Do you want me to actually do a deep, deep dive on every single one of these companies? Let me know, guys. All right. Have a good day. Hit the like button, comment down below, subscribe to this channel. It really, really helps the YouTube algorithm, helps us grow. And until next time, guys, I'll see you.